Experience in trading cannot be taught. It can never be taught. You can't teach somebody the experience in trading. Experience can only be experienced. So no matter how much knowledge I'm putting out there, if you are not putting it to practice, none of it will be worth it. You must be willing to take a leap, face challenges and learn from mistakes. Only then can you be able to perfect your trading skill. As the genius trader Hazy Livermore once said, there's nothing new in trading, and there can't be anything new in trading. Whatever happens or whatever is happening in the market today has happened before, it has been happening, and it will happen again. So it is up to us to focus and learn the behavior of how the market operates. Now, let's dive into the world of cryptocurrency trading, specifically how to find profitable market using the fair value gap strategy, popularly known as FVG. And guys, remember, every successful trade is like a superpower. Okay, it's like having the ability to print your own money, but not illegally. Let's just get started. First of all, what is fair value gap? In crypto terms, fair value gap, or should I say in trading generally, fair value gap refers to the difference between the current market price of a crypto asset and its estimated true value. Let me repeat it this time around slowly. Fair value gap refers to the difference between the current market price of a crypto asset and its estimated value. Now let's break it down simply so that you get to digest it gradually. So fair value gap is the difference between what people are willing to pay for that asset and what the asset is truly worth. It is the difference between what people are willing to pay, versus what the asset is truly worth. So let me give you a real life example or a real life example so that you'll get to understand it perfectly. Now imagine you want to buy a house. You want to buy a house and 10 other people want to buy that house. Now these 10 other people are willing to pay $500,000 for the house. Now this is what they are willing to pay based on the fact that maybe they like the location or the security of the area, understand, or they have predicted that the price of the area or the price of the location or the house will increase in the future. That's why they want to pay $500,000. But the true value of that house is $450,000. Now this $450,000 is what the house is actually worth. So on paper the house is $450,000. That is the worth of the house, considering the cement they used, the labor, the location and everything. It's going to cost $450,000. But those 10 people that are willing to buy, they are willing to pay as high as $500,000 for that house. So the difference between the market price, which is the price that people are willing to pay, and the fair value, which is the real price of the asset, is $50,000, because $500,000 minus $450,000 is $50,000. So $50,000 is the fair value gap in this example. I hope you understand. And we can say that the house is overpriced or overvalued. So this is an example of a bullish fair value gap because they overpriced the house. All right. Now, if the opposite happens, for instance, the house is worth $500K, but people are willing to pay only $450,000. That is an example of a bearish fair value gap. I hope you're following. Now, apply this in crypto term, or should I say apply this concept to cryptocurrency. Take for instance BTC over here. Let me indicate it. Take for instance BTC now is currently selling at $97,000. All right, but its true value, the true value of BTC based on fundamentals and development, based on how you've seen things, is $93,000. This means that buyers stepped into the market and started placing orders way above the current price of BTC, making it to increase in value. Now, the next question you might want to ask is, how can fair value gap make me or help me to make profit in the market? Now, take for instance, like I told you, BTC is trading at $93,000. Maybe not. Don't take this current price now. Okay, so just imagine BTC trading at $93,000. But based on market sentiment and prediction, you know that the true value of BTC should be $97,000 based on how you've seen things going. Okay, all you have to do is to buy BTC when it's $93,000 after you finish making your analysis. Okay, so that when the buys, or should I say when the buyers realize that BTC is undervalued, all right, is oversold, the buyers, we're talking about the buyers, right? The buyers will start demanding, okay, they'll start demanding the BTC assets, okay, making price to go up. All right, so that whenever the price starts going up, you start making profit when the price is going up, since you bought it when it was $93,000 and it's now $97,000. So now the next thing is, since we know how, or should I say, since we know all this information, the next question I know most of you will want to ask is, how can we identify an area of entry, or how we can spot a fair value gap in trading? Since we all know that fair value gap is the difference between the current market price and the true value of the asset. So for instance, if the current market price is 93,000, like I told you, and the true value should be 97,000, how can we know that BTC is going to get to at least 97,000 in the nearest possible future? All right, and how can we enter? Where should we enter the trade? I'm going to go to BTC now. All right, I'm going to go to the charts and then I'll show you how things work over there. Now all we have to do, okay, all we have to do is to click on market over here. Let me indicate it. Click on market over here. All right, and it's going to bring us to this interface that will show us different assets. And as you can see, BTC is currently trading at 97,005, about 4.65. It was 5% a while ago. So if we click on BTC now, this is going to be the charts. Okay, I'm having a little bit of a network issue, but it's going to load up right now. Now when you get to this chart, how can you identify fair value gap? And after identification, where can you enter? Where can you enter the trade? This is what we need to know now. So fair value gap is being formed. For instance, if we are looking for a bullish fair value gap, it is being formed as at the point of should I say a rejection, right? So it's being formed at the point of rejection where price rejects. All right, so and as you can see, the price rejected over here. All right, buyer steps in over here. So sellers have been selling the asset, and then buyer steps in over here. So if we want to look for the fair value gap over here, we're just going to look for the green candles, like 3 green candles. Let me indicate it for you. So this is, sorry, right here. So these are the 3 green candles that formed the fair value gap. So how can you determine the fair value gap? Let me show you. You just draw a line, all right, starting from the top of this you just draw a line starting from the top of this candle, and then the line should be at the bottom of the third one. So the top of the first candle, then the bottom of the third candle. All right, so when you draw that line, it should be like a rectangle. When you draw that line, that is going to be your fair value gap. So let's do it. So all I have to do is to click on rectangle over here, right? Click on rectangle. Let me draw it properly. Let me just slide over here and then show you. So this is the icon for rectangle. So when you click on it, you just have to, you know, place your tracer on the top of the first candle. All right, the first confirmation candle of rejection. Yeah, I think this is okay. So just draw a rectangle and let it touch the bottom of the third candle, just like this. All right, and then you extend it. You extend it like this. So ladies and gentlemen, this is your fair value gap. All right, so the distance between the top of the first candle and the bottom of the third candle, bullish candle, since we're talking about bullish fair value gap, so that is your fair value gap. So this over here, all right, this gap over here is the fair value gap. All right, so how can we know if this fair value gap is going to actually go bullish? So as you can see, the market actually went up. All right, it went up, and then the sellers came back, brought the market down. But what happened is that they tried to, you know, penetrate the fair value gap and make this price to, you know, actually break down the gap. So had it been that this price broke down the gap, that the candlestick broke down and, you know, reached somewhere, I think here, okay, then that means that the fair value gap has been disrespected, and it's no longer called a real or a true fair value gap. It is now going to be considered as a fake or a weak fair value gap. But as you can see, the price of the candle did not break through. All right, it didn't break through the gap. So after the sellers took it to this position, the buyers held it, and then price consolidated over here. Right, after the consolidation, what happened? The price spiked up. And let me show you something, because I'm actually on a live trade right now. So it's on futures. All I have to do is go to futures. So I'll just click on futures right here. All right, and show you my current trade. So assuming I bought it, or I should I say I saw the opportunity and I saw the fair value gap. All I have to do is go to my indicator, click on the rectangle, and then place my pointer and then draw the fair value gap, so that I can see what's actually happening in the market, if it's a real fair value gap or not. And as you can see, guys, the fair value gap turned out to be a real one. So I'll just place it at the bottom, at the top of the first rejection candle or the confirmation candle, and then it should touch the bottom of the third candle. It has to be 3 candles, guys. It has to be 3 candles, and the gap is going to be at the center of the second candle. So after getting this fair value gap and making sure that price did not actually disrespect, so sellers did not disrespect the fair value gap and broke down the gap, then all you have to do is wait for a confirmation, which is this candle in this case, the green candle. And then after consolidating, this is the consolidation, sorry. So after consolidating, after price consolidated, it went up. So as you can see, I am on an active trade. When I saw this, I decided to buy BTC at 93,000 over here. So this is where I entered the market. Okay, and I actually came late. So when I entered the market went up with me. All right, it went up to as high as 99,000, and I'm currently on a $3 profit. So I'm following a very small margin, which is 10x. All right, this is futures, and I know that there is going to be under a fair value gap, which it has already formed. Let me show you. Now, guys, this is the second fair value gap. This is the first candle, all right, and this is the second, and this is the third candle. All I have to do is place it on the first candle, then draw the line for it to touch the bottom of the third candle, and then draw it, pull it back like this, and wait for sellers to reject. So the price might go down. What we don't want is that we don't want the price to actually break through this fair value gap, because it's a disrespect to the fair value gap, and that means that sellers have overpowered the buyers. So if it just if it just stayed within this gap, all right, and then went back up, all you have to do is to wait for a confirmation candle. We should just wait for a green candle to confirm our entry, and then we'll just buy, so that the price will continue to go up with us. All right, so I will not pull out my money now. I'm not going to pull out this trade. I'm not going to quit from this trade. I placed it that it's going to reach 106,000, which I'm expecting it to reach that level. And this fair value gap right here just actually proved it to me that it's going to reach that amount that I've placed my take profits. All right, so I think that is it for now. If you're in the VIP, we are going to be talking about how you can be able to use additional indicators like the volume indicator, the RSI indicator, because RSI is one of the best combo you can use to actually combine with the fair value gap to give you a perfect result. So if you want to join the VIP, you can just talk to me or talk to us on the WhatsApp link on the description below. So I hope you understand this fair value gap. If there's any question, you can just drop your comments, drop your question on the comment box, so that I can be able to answer them. Right, so I hope this video helps, and guys, don't give up. Trading is not easy, but just like I told you, there's nothing new on trading. There's nothing new about trading. All that is happening in trading has happened thousands of years before. There's no difference. There's little to no difference between a trader that wakes up and goes to the market and sells vegetable and a cryptocurrency trader. The difference is that you're just trading on screen and you don't have to go anywhere, but he has to, or he or she has to go to the market. But the idea is the same. We are all buying low to sell high. All we have to know is how the market manipulates people, how the sharks how the big investors, the big money manipulate people. And then when you're done knowing all that, you can be able to go with the flow and ride the waves, and make profit, increase your portfolio, and actually make a living out of trading. So I hope you don't give up, and I hope this video helps, and I hope you have a nice day.
When you focus on profits, you lose. When you focus on the process, you start winning. Keep learning until the L becomes silent.